Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, inflation isn't going anywhere, and we're going to give you the charts to tell you why and why you need to brace yourselves for this and how it's going to affect your portfolio. We're going to get all into the details in this video. You're not going to want to miss it, so let's dive in.
Trade Genius.
Well, Bob, another round of charts here that I think everyone needs to see, because no matter what they're saying out there and what picture they're trying to paint that, oh, inflation's being conquered, it's quite the opposite, isn't it?
Yeah. So first of all, guys, we were going to talk Bitcoin today, but this stuff's too important, so we thought we'd throw this out for your weekend pleasure. Yeah. So guys, we have bad news, good news, and bad news for you. What do you want first? I think we'll give you the bad news. So here's the interesting thing. Now we have the Fed meeting on Wednesday. And in the past, the Fed would respond to the PMI fairly closely. And if you can look at this chart, you can see when the PMI starts to roll over, especially when it gets down to the line where actually prices right now, is that the Fed's already reducing interest rates.
Yep.
They're not doing it this time. We've already had one pause, or skip, they call it now. I'm pretty sure, Phil, we're going to skip again on this one as well, because I think because of the lag effect we have with inflation probably going up for the next 3 months just because of the price of oil. But the longer they take the pause, the more permanent damage they're going to do to asset prices. And, I think you and I talked about before, I think that's exactly what they want to do. I think they're very, very worried that money's too concentrated in the hands of too few people, and they're creating structural imbalances in the economy. And it's funny, I'm pretty conservative, I'm pretty libertarian, but we created an environment with the free money that have really frozen out a whole generation from the housing market, and I think that's true. I think that's destabilizing for our society going forward. And I thought I'd want to get your thoughts on that before we flip on to the next slides, Phil.
Well, I was thinking about, we talk about the Federal Reserve and all the mistakes that they're making, and it seems like they're trying to create more of a chasm in between the haves and the have-nots. But then I was thinking too, though, these Federal Reserve chairs, Powell being our most current one, they have a legacy that will live on. And, people already look at Greenspan and the argument there with him is that he made a huge mistake with the easy money policy, and it was not a net benefit for the country and the economy, which I tend to agree with. So do you want to be the Federal Reserve chairman that created the largest wealth inequality chasm in the history of the country? And so those are things that I think these guys really seriously think about, even though, all these guys are wealthy and but they will have that going on after they pass on or after they leave the position. And, that's something that nobody really wants to have on their gravestone, is that they screwed up the economy, right? So I think there is, despite what we think and maybe, how evil you think federal or central banks are, these guys do want to have some sort of cover that they can hide behind, that they did some good. So I agree that there's going to be some kind of effort to try to rein this in. And I don't think they're going to claim a victory too early on inflation, although they are starting to do some victory laps in so many words about how now it's gotten back down toward that, closer to that 2% level. But there has to be, in my mind, there has to be a deflationary period of, a few quarters to get some of the last 2 years unwound. And I think in my mind that if Powell's super serious about this and he does want to get this economy kind of back towards the median, then he's going to allow that to happen, which obviously means you're going to get a recession. But they cannot utter the words deflation, because the algos and all of the more sophisticated market participants will freak out, because deflationary spiral is just one thing that I believe these modern markets are deathly afraid of, and will just absolutely freak out if they think that's coming. You'll see a big spike in bonds. And they can't have that. They have to be very, very, very careful and measured on what they speak, how they communicate in these markets, because there's so much leverage. And you can see, like yesterday, right? Boom, 60-point drop. Why? Well, it was just a lot of leverage built up into the OPEX hedging, right? That came off. And so this market now has been designed for extremely volatile moves. It's not like it used to be a couple years ago where you could go through a summer, have a 10-point range on ES. We do 10 points in 5 minutes now, right? And the consensus is that because of the way that the options flows are now, we're never going to go back to those very dry periods of volatility that this, and that's the weird part too. The VIX, which is the measure of volatility, is getting crushed, even though the price action is more of a, say, VIX 30 or 40 environment that historically we're used to seeing when we get this type of price range intraday. So bottom line is, I think they're going to be very careful because of the modern markets and the way that they're leveraged and the volatility that's now built into them. So I do think there's going to be a concerted effort here. And that's why I think that this chart's going to call their bluff and you're going to see the rates. We're not going to get a raise in the next week's meeting. They won't raise. And then it's going to come down to, I think, are they pausing or are they skipping? Because if you pause, that means that the amount of raises you plan to do are still on the menu. You're just pausing, pushing it off. If you skip, you're eliminating one of those raises, and now your Fed funds rate target is lower. Okay. And that's key, because if they start giving up on their target, then that tells you that everything that the yield curve inversion is forecasting is coming to pass, meaning that this Fed fund rate in orange is going to flatline here. And the next thing you're going to get, the next move is going to be down. And that's going to be because of a recession.
Yeah, no, I agree. And when we show you this next slide, you'll see the conundrum the Fed's in. My personal view is that they're not going to do anything, but they'll probably start reducing in February when the CPI calculation shows it drifting down again. But on the good news side is that I think, but just like inflation, I think oil has really been pushing up pretty hard. They squeezed out all the shorts pretty effectively. We flipped now to a leverage long environment. And what we're seeing now is that what they call the commercial traders are now increasing their short bets. Now, this is different than, traders, speculators increasing their short bets, because these guys actually hold the commodity. And what they're doing is basically saying, I have the commodity. I like the price. I don't like uncertainty. So if I can get $90 oil out the next couple months, I'm going to start shorting or selling my production, what they call selling it forward, and locking in prices. Now, it's probably going to cause oil to stall here. And then you have some other data points that say we may drift down all the way into late winter. I'll take it month by month because I don't know the geopolitics going on. However, it's caused me enough of concern that I'll be repositioning my energy positions here over the next couple of weeks to not put myself in a position of being overweight. I'll get back to being a little bit underweight on it and raise more cash, because I think this is going to give that maybe a little bit of that deflationary scare fill.
Hey guys, if you guys don't mind, head over to tradegenius.co. Check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live, and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that.
When oil starts to go down and then companies are not reporting good earnings, this could be the good catalyst for the October push down in the markets, because, energy's been getting a higher and higher weighting lately. And I think, as you could see, they go after these energy stocks like rabid beasts. They don't drift down. They're not in NVIDIA where they're protected. If they can blast these stocks down, they blast them down. So look for a trade, for you guys subscribe with us, is look for some trades from us on the short side of the energy sector. Not so much the integrated, but some ETFs. We'll share them with you guys. If you want to trade with us, just join us and I'll give you some. It'll be a good trade for us. Probably the way it's been working, Phil, is that it looks like it's 2 months up, 2 months down, 2 months up, now 2 months down. So at least down probably into Christmas. And I think there's some trades there for us.
Yeah. And what was striking to me on this chart, and you and I had been chatting about, well, even though there's that inventory drawdown in fourth quarter, that potentially we could be topping out here. And we're still like bullish energy. I do think it has a nice rebound and will probably push up, but we have to be careful here in the short term, right? So, but what's interesting to me on this chart was that when you look at the positioning, the less net short, and when we get from these real low readings on the less net short, meaning that people are more long, and it starts to crank back up, meaning that the shorts are starting to pile in, you'll notice that when you get this pattern of this sharp move higher from the lower levels, that you can see on the chart there, and you have about 3 or 4 examples, that it makes it very difficult. And you have to come from these lower levels to trigger that pattern, but it makes it very difficult for the price of oil to go up. And, not necessarily that it'll crash, but you could be foreseeing a top here in the shorter term. So nothing in a straight line, of course. We'll have bobs and weaves, but if you're thinking about this thing's going to make a run to 120 from here, I don't think that's in the cards. I don't think we're going to be off with a parabolic move similar to what you saw in 2021 to 2022. So that's what I think we're going to get from this chart.
Yeah, I totally agree. But no rest for the wicked. So you got oil going down, and then now you got this feeder cattle just going straight up.
Yeah, wow.
I mean, this is scary stuff. And if you like beef, you might want to get ahead of this train. Although I noticed beef prices have gone up in the last couple of weeks, so probably from that surge we had about a month ago, and it's not abating, Phil. So, I mean, we're talking, we'll be frozen out. The only people that are happy right now are Chick-fil-A, okay? And their cow spokesperson. He's going to get a reprieve. But yeah, I mean, look, beef's going to become unaffordable and just amazing. I'm going to have to do some research. I don't know, if there's any really good beef plays out there on the public side. A lot of the beef production actually are owned by is a cartel here in the United States, and a lot of them are owned by Brazilian companies. And so it's going to be really, really interesting to watch. And if you notice, Phil, we've been kind of careening from one commodity spike to another. We go from eggs, we go to natural gas, we go to oil, now we go to beef. It seems like they're just taking these shots in turn, and prices just keep creeping up across the board. But it's not good at all. And I think this is, especially our country, we're a beef eating country, and I think it's another insult from the poor policies that we have as a country, that we have the indignity we have to suffer on their behalf.
Yeah, no, I agree. And you're right. We're carouseling between different commodities, having these hyperinflationary moves. And I think that just tells you that, inflation is still pretty massive problem under the hood. And that's why I think ultimately Powell's not going to relent, even though the market's, more and more wanting him to. And I think they're going to even maybe rejoice on this next rate hike that doesn't happen, right? Next week's rate meeting. So I think you just have to kind of look at what we talked about today and just know that here's what they're trying to get to. They're not, there's nothing the Fed has said that said they want to stop going after that 2% inflation target. What's been discounted, I think, is the fact that they're going to throw in the towel. And so the market's probably a little overvalued in terms of that, because I don't think they're going to. And I think they have enough information that we're showing you guys too, that it's definitely a problem, because otherwise you wouldn't see spikes in eggs, right? We said eggs was the new Bitcoin 3-4 months ago, right? Because eggs went parabolic, then oil, and then now this, and there's going to be something else in next quarter. So it's not going away, guys. And then Bob, you had an interesting chart.
Yeah.
If you want to switch gears.
Yeah, I want to leave you guys with despair.
Yeah, I know we didn't talk about Bitcoin, but we're going to talk about Bitcoin. And
here it is. Here, people say, "What's the case for Bitcoin?" Here, I'll just leave this chart up for your proof.
Yeah.
Unbelievable.
It's almost as if every administration, red or blue, has a mandate to sink us farther into debt.
Look at this. We're going parabolic on the debt side. If you flip this chart upside down, it looks like
it's
NVIDIA,
wild,
right?
It's wild, Bob. Yeah.
Yeah, and look, we can't get out of it now. That's the sad thing about it. So, that's why you see things like oil spiking and beef spiking, and
exactly,
because they're what they call scarce items. I don't mean they're scarce. It means you just can't easily print them. Look, they tried to print meat, right? They're trying to get you to eat insects. They're trying to get you out of your car. Why they're doing all that? They're doing all that because they know what the heck's coming down the pike here. And they want to say they were in front of it. But this is utter disaster. So that's why you have to have Bitcoin, even though we may get a 10 or 20% pullback, that's going to be nothing compared to the slingshot. Same thing with gold and silver and Bitcoin miners. You want to have all those. You're going to want to have some energy plays. So this is where we're going. If you don't own something that's tangible, you're going to own nothing. And by the way, you will not like it. I can guarantee you that.
I totally agree. So guys, let us know your thoughts on this weekend video. Do you think that we're going to be dealing with inflation longer? Do you think Powell's going to stay the course? Let us know your thoughts. We'd love to hear from you. Please check out our specials over at tradegenius.co. Gets you into the room, helps you navigate these markets day to day. We also have a newsletter there that gives you more technical details and levels day to day as well. So check that stuff out. Bob, thank you so much. We'll see you guys on the next video where we will talk about Bitcoin. Guys, have a great weekend. We'll see you on the next one. Take care.
Trade Genius.